What is up, party people? I want to share with you a really fun, easy, simple tactic as it relates to investing into the markets, into trading. And I want to kind of give you a quick play-by-play, a play-by-play of a stock that you've probably heard about, but the winds have been sweeping the countryside, and many, many people have been reaching out saying thank you because they wanted to have an easy win, and they got an easy win, and they want to know why now. And so that's what I'm gonna do. I'm gonna walk you through the anatomy of a two-ish month swing trade slash investment. I'm gonna talk through why, how, where, when. Hopefully it'll motivate you. I'm sure it'll inspire you. And most importantly, get you all excited and pumped up about the opportunities and what's truly available to not only you, but anyone in the world. Everyone can do this and should do this, and I want them to do this. So, well, let's go do it. I'm gonna do a screen share, and what we're gonna do is we're gonna cover Webull. And I'm gonna pull up Webull. Now, step one, this is a stock slash company that I'm familiar with, that I've heard about, that I'm at least aware of how they make money. And I think it's imperative to be aware that every single person on earth has access to public markets. That's why it's called a stock market. It's available for everyone. Everyone can access it at any time. It's available for all of us. And I think that's really, really cool to know. Webull is a stock trading platform just like Robinhood. Very similar, in fact. And the reason that it's good to know, hey, this exists and this exists, aka Robinhood exists and Webull exists, is you can compare the two. So if at any point in time you wanted to pull up Robinhood and kind of see what it did, you'll notice that there was a opening and a big run up and a big drop and a very long consolidation and then eventually a pop higher, which is really cool. So to that point, that's probably what Webull would do, slash, that's exactly what Webull did. Now, thankfully, I'm here and there's a lot of very great traders at Real Life Trading helping other individuals understand and see some of these patterns and see the movement and just kind of make that correlation. But this was a really, really fun trade. So a few months ago, back in April, I said, hey guys, let's follow me on a particular trade that I'm going to go through and I'm going to show you exactly how to do it. And we're going to win nicely and things are going to be a lot of fun. And there was thousands and thousands of people that said, awesome, let's do it. So what we're going to do is I'm going to kind of go back in time to when I mentioned that, and that was right about here, when Webull was about $17 a share. Now, what's interesting about it being $17 a share is two things. Thing number one, that's not very expensive, right? 1,000 shares, if the stock was $17 a share, is only, well, 1,000 times 17 or $17,000. That's really not that much money. I mean, if you think about it, ultimately. If you're going to buy a house as an investment, you probably need a lot more than $17,000, right? In fact, you probably need a W-2 and good credit. And there's this ginormous list of getting approved for a house. And then you go buy a house and it's $200,000-$300,000 and you're paying on it for 30 years, right? And there's this whole thing. Then things can break and you have homeowner's insurance and whatever. So $17,000. If you're watching this video, there's a really, really good chance you have access to that capital. But here's what's more important. Secondly, is it's not like if you have $17,000, you just buy the stock. Of course you can, but very, very often, if you're buying a stock, I tell people a lot, this is a great strategy, is to buy slow and buy low. Take that, let's call it $17,000, and buy $1,000 worth of stock at a time. So instead of going all in on day one, you are adding into it, right? You're buying into that position. And so what I'm going to do here on this charting software is kind of replicate that. And I'm going to do you by buying 20 shares at a time, just to kind of give you a little bit of awareness on how it works. And you can kind of visually see a little bit about how a position like this would kind of come to fruition. Now, first and foremost, I also want to buy off of these blue and red lines. These blue and red lines are the 100, 200 something moving average. and I use them very, very often as really strong levels to buy and sell stock off of. Okay, so Webull, 3 down days in a row. You've heard the term buy low, sell high a million times, right? Buy low, sell high. So we're going to buy low. We're going to buy into weakness. So bang, we buy 20 shares. All right, we're in for 20. So 20 shares times 17, $400 approximately. Not that much money. All right, so you're taking this pool of money that you have and you're slowly adding to the stock over time. Next day, you'll notice it has a black candle, which means it's a down day. Your P&L, right, profit and loss, would have been down $36. But again, you still have cash available. One of the biggest reminders in this whole aspect of trading is you're never going to buy the exact bottom. So anytime you're investing in stocks, when you buy, it's never going to be the low. It's always going to go a little bit lower. So it's okay to buy low and to buy slow. So we buy another 20 shares. Next day comes down. Now you've had 5 down days in a row, and we're trading into the 100 simple, the 100, 200, these red and blue lines. So big, big selling event. Overall, you can see the stock was at 30, right? This is, look at the bottom of the screen, April 22nd. So we went from 30 to 15 in 4 days. So a drop of 50%. So at that point, you're probably thinking to yourself, okay, well, there's most likely going to be a little bit of a rebound coming in. Remember, you still have this $17,000. So instead of buying 20, let's go ahead and buy an additional 60 because it's nice and low. You're at a support level and you buy those 60 down there. And what you'll see is you slowly have this beautiful, beautiful little rally, right? This nice little pop that comes in. Now you're profitable. On just 100 shares, you've already made $289. What this $289 represents is just pure absolute profit. That total investment would have cost somewhere around $1,500 out of your $17,000, right? Still having a lot more capital left to play with. So this $300 of pure profit, this is something that you could use for future purchases. So in a situation like this, right, you can go, all right, sweet, I'm going to get out. Stocks had a nice little run up. We've had a couple of days in a row of good movement here. I'm going to get out, take my profit. So now if you had 17,000, you have 17,300. So you have $300 of free money, essentially profit, that you can use for future trades. Okay, so here's the stock starts to come down again into the 100 once again. So this is where you go, all right, I'm going to go ahead and buy my 300 shares for free, or $300, I'm sorry, right? Totally free shares, which is about 20 shares. So you buy 20 shares using that profit, so that $300. Now, again, why are you buying here? Big, strong down day. Down 14%, trading into the long-term 100, 200 simple moving average. Buy low, sell high. Start repeating the process. Number one, trading like this also teaches you that buying on down days, buying on a discount is not a bad thing. It's not terrifying. It's not scary. It's not worrisome. And I would agree. So that's your profit that you're buying with. But if you remember, just a few days ago, you also bought 100 shares at the exact same price, right? Factor that in. So if it worked once, is it worth doing again? And I would argue the answer is yes. So the 20 shares you're buying with profit, and you're going to spend another 80 shares to buy a total of 100. So now you have 100 shares on Webull. Have a little bit of a down day. So now you have 1, 2, 3, 4 down days in a row, 5 down days in a row. 1, 2, 3, 4, 5. So you can see you're down here $180, right? Which is still less than your overall profit that you originally made, even on 100 shares. So now, in a situation like this, again, if you have this original amount of cash that you're looking to invest into stocks with, using stock, you can have so much more leverage, so much more speed, so much more access, so much more information, and in my opinion, than you do with real estate. And the situation of Webull is like, okay, cool. We got 100 shares. We still have our $17,000 to invest. Let's go back to buying these 20 shares on each down day. This is 5 down days in a row. So I'm going to go ahead and buy another 20. So now I'm in for 120 shares. Another candle comes in, another down candle, another 20 shares. And I'm in for 140. Another down day. I'm in for another 20. Another bear candle. So now you've had 1, 2, 3, 4, 5, 6, 7, 8. Let me go ahead and buy another 20. So I'm in for 180. 180 shares now. Next day. Okay, not a down day, a little bit of an up day, right? A little bit of a green day and strong up day. Look at the profit. Already profitable, just a little bit on the overall position. Now, what's cool is I'm sure you know this, just in case you don't, it's okay. But one of the very fascinating aspects is with over 100 shares of a stock, you can start to rent out that stock. You have shares of Webull here. You can then rent out the stock, bringing in income for yourself. Someone in the markets would actually pay you money to buy your shares from you at a higher price. Now, you can only do this in shares of 100. So since you only have 180, you can either do 1 or 2 contracts. So let's go ahead and do this is buy another 20. So now we have a full 200 shares, and you could go in and actually rent out your stock and get paid money to potentially sell your shares at a higher price. So if in this exact situation you did this, and let's say you sold a $15 covered call, so that's what this purple line is going to represent, is 15. That's what the strategy is called, is a covered call. So you sell this covered call and you bring in cash. In fact, you probably would have brought in 50 cents per 100 shares, which since you have 250 cents times 200 is $100. Not a lot, right? Not life-changing money, but you made $100 for what? $100 for free. That's pretty cool, seeing that that's actually more than your current profit and loss, and you could take that $100 and do what with it? Buy more shares. In fact, you could buy 8 more shares totally for free once you do that covered call. So you do the covered call, you sell it at 15, and I'm going to take a vertical line, and that vertical line is going to represent when this position would expire, and that vertical line is going to be May 30th. So if Webull is above 15 on that vertical line, you will be forced to sell your 200 shares there at $15, which would be a very nice profit. And if it's below 15 on May 30th, then you do not sell your shares. You keep your shares and you keep the $100. In fact, you keep the $100 no matter what. So we're going to go ahead and buy 8 more shares for free. So now we're at a 208 share position. And the very next day, stock is down. Remember, we're still buying on down days, and we still have our $17,000. We're going to go buy 20 shares on that down day. So now we're in 228 shares. Big, big up day. Beautiful. We're still below 15 on May 30th. Nice, nice day right there. Right, we're a little bit higher. 2 days later, the covered call has expired worthless. So you can see we are not above $15 on May 30th. So we keep our $100. We still have those 8 free shares. And now we're going to go back to our system of buying some shares on down days. In fact, we missed this down day in this example that I have here, right there. So we missed that down day there. So again, let's say you're on vacation or you had to take your dog to the vet and you got another day. So you're like, all right, sweet. Well, I didn't buy 20 the other day. Now I'm going to go ahead and buy 40 because it's another down day. So I'm going to go ahead and buy 40 shares. Buy. So now you're in 268. And you can probably see what I'm doing here. All I'm doing is I'm coming up with a process. I've studied the company. Now what's really great is there's earnings right here. So you can click on View Bull Financials and you can start going through some of this information. Again, even if you don't know everything, you don't need to know everything about what this says, but I'm sure you can start figuring out some aspects of, is this a good stock or is this not a good stock? Is this a good company or not a good company? One of them is right here. Cash and cash equivalent, 1.2 billion. Debt, 13 million. Quite a dramatic difference. So the company does have debt, but that's like you if you had $100,000 in your bank account and you had $30 on a credit card. Is that a big deal? Well, the answer is obviously no, right? The company has a billion, 1.2 billion of cash and cash equivalents, and they have only 13 million in debt, which is it's nothing, right? 1% of a billion, 1% of a billion is 10 million. That's 1%. So they have of their account. Again, that's very much like you having $100,000 in savings and having less than $1,000 on a credit card. So they have a 1.2 billion and they have 13 million in debt. So even just knowing that, it's not that bad. Okay, cool. Let's go over to revenue and let's kind of just look at this and look at it annually. So are they growing revenue? Digital brokerage services. Yep, revenue is increasing. Okay, let me scroll down here. Other countries, you can see the revenue is slowly growing as well. All right, sweet. Earnings, they don't have that much yet because they're just kind of brand new. So again, not tons of information there, but overview statements, you can go into the actual balance sheet here and start looking at some of these numbers to really get an idea of what are they doing, right? Operating expenses, operating income. Look at this operating income starting to grow here. Pre-tax income, you can see the numbers growing pretty nicely. Year-over-year growth growing pretty nicely, right? Went from 2 million to 13 million. So again, you don't have to be an accounting expert to go, yeah, all right, stock's making money. This is good. This is what I want. So now you're in at 268 shares. You've had two bear candles in a row. Here's a fourth bear candle or a third down day in a row. So now, just for giggles, you're going to go ahead and buy 32 shares, right, which brings you up to a nice even 300. And look at this line. What's happening is this is continually lowering your cost basis here. Now we're into June. Hello, big idea. We've been doing this for about a month and some change. So that's important to know. All right, month and some change. Let's continue here and let's minimize this. Next, another down candle. So again, we go and buy another 20 shares, right? It's a practice. It's a habit. It's a ritual at this point. You still have money to spend and nice little up day. Cool. So we don't buy anything on that day. Down day, 20 more shares. Next day, another up day. Don't have to do anything. Next day, inside day. Next day, nice little push, right? Some volume is starting to come in there. Kind of interesting, but it's a down candle. So I'm going to buy 20 shares on this day. And another candle, inside candle, another down day, 20 more shares, another down day, 20 more shares. So now I'm in 400 shares. You can see the P&L is down $753. But if you remember, when we first started this, you had $17,000, and that's where Webull was at the time, right? It was at 17 grand. Now the stock is at $10. So if you had $17,000, you're already in for 400 shares with an average at 12.27. So that is a total cost of $5,000. You still have $17,000 plus your profits. Remember, 17,300. So you have $17,300 that you can now go out and let's just call the difference. You've already spent 5,000. So you have $12,300 that you can still spend. So if you come in here on this down day right here at $10.39 and you go, well, man, let me go ahead and buy another 400. Go ahead and buy another 400 shares. Right now, you're spending 4 grand of your remaining 12,300. Now, if you start buying 400 shares on your down days, your cost basis is going to get down pretty quickly, pretty significantly. Okay, beautiful little update here. You know what's interesting with this little small update is, believe it or not, you know, if you have a covered call, if you have a cost basis down at 1133, you're only in 800 shares, you could do a covered call anywhere above your cost basis. And like I said earlier, if you are selling shares above where you bought the stock for, you're profitable. And if you're doing a covered call, you can do that covered call and still use the proceeds from the covered call to buy more shares. So another strong update. So on this day, we're going to use our 800 shares to do a covered call on. And again, let's just say hypothetically, we're going to get in at 13. So we do a $13 covered call, and that covered call is going to expire. So we sell at 13, it's going to expire in a week, June 27th. And we're going to bring in another $100 of premium, probably a little bit more since we had 800 shares, but I'll be generous and just say it was $100. Now the stock's at 1077, so you could buy another what? 8 shares, 9 shares for free. So let's just say 8 shares. You buy 8 shares for free. There we go. Now we have 808. We still have money to spend. Next day is another down day. So another down day. Now we're going to go in and we're going to buy another 400 shares. But instead of buying 400, we're going to buy 392. Now we're in 1,200 with a cost basis of 1109. 1,200 shares. Cost basis 1109. So again, we're in for 13 grand. We still got another 4 grand that we can buy worth of the stock. Another down day. Cool. Beautiful large update. This is nice. This is what's called a gap and go. Volume is coming in. People are starting to buy. They're starting to get excited. I like it. Nice little gap up here, fade down. All right. Inside day and down day. So our covered call is expired worthless. There we go. And now that our covered call is expired worthless, this is a strong down day, right? We end up down 4.2%, as you can see up here. We're going to go ahead and buy our remaining 400 shares to full up our full position. And now we've waited how long, right? We started buying Webull over here in April. So now it's late June, 2 months, all of May, all of June. And you've been buying on down days. You've been selling calls. You've been studying the company, potentially looking at their investor relation, reading some documentation about their earnings, seeing what the company's doing, a lot of things that you can do. But one of the things that really stands out to me, again, from a technical analysis standpoint, is you have a beautiful gap right here, right? Knowing what this is, knowing that the people who are getting into this position are very excited, that's great. Also, I can look at this and go, this candle, if we get above the high of that candle, so specifically I'll draw an arrow here, if we get above the high of this candle and this candle, so these are 2 bear candles, they're pretty significant. Any person who's sold in that position is going to be upset if it goes higher, so they're going to have to buy. So now we're in 1,600 shares. Again, so instead of buying all of your shares on one day, all the way back here in April, and being down significantly, you bought slowly and you used some of your profits to rebuy. You did some covered calls and brought your dollar cost average down, and you slowly averaged into the position. This, I think, is pretty smart. This is pretty smart trading. And then you get extremely lucky and extremely rewarded here on Monday. Now, what's interesting about this Monday is you'll notice, boom, I'm up 1,500 bucks on one day. Holy smokes. It's like, well, yeah, it's because your cost basis is so low, number one. And number two, you have a lot of shares. That's the thing, family. If you have a lot of shares, it's actually meaningful. It actually matters. For every 1,000 shares you own, if a stock moves $1, you make $1,000. That's just the math. So if you buy a stock and it moves $3 and you're in 1,000 shares, you make $3,000, right? That's incredible. So what's fantastic about this exact position here is we did, in fact, on this Monday, close above these 2 big bear candles with huge bear volume on June 10th. We also closed with very, very strong bullish volume, buying volume, as you can see here. And really, from a technical analysis standpoint, one could argue that this is a pretty decent potential inverted head and shoulders pattern, which is a bullish pattern. This is also a pennant pattern, which built a lot of pressure. But this volume, this candle, and the fact that we closed above the high of those 2 bear candles is very significant. This is the breakout day right here. So what does that mean? That means you hold. Or maybe you got a job. You had some extra money come in over the last 2 months. Because remember, I said you only had $17,300 after our first little profitable trade over there. But maybe you had an extra 500 bucks that you're able to save up over the last 2 months. So we're going to buy another $500 worth of Webull at $12 a share. So 500 divided by 12 equals 41 shares. Let's go ahead and buy an extra 41 shares. Okay, because it all adds up and matters. All right, we've closed above these 2 big bear volumes, and this is the next day. Really nice little run up, and then this is pretty much, it gets us into where we are present day. So if you are in present day Webull, these are 3 strong days in a row. This is what you want to be in, right? That type of movement. And again, really, truly, being in this type of move is quite liberating. It's quite exciting because it reminds you, hey, 1,000 shares of a relatively cheap stock. I mean, look how much volume is coming into the stock, 24 million. So is 1,000 shares a lot? No, it's not. Like, it's not even noticeable. So my theory in trading has always been, hey, how can I find a good company where the revenues are increasing and the stock is going down? If revenue and profits are going up and the stock is going down, you got to buy more of it. And you can buy low and you can buy slow. And you can buy with other streams of income. Shoot, maybe you drive Uber on the weekend. And every $45 that you make in tip money, driving Uber on the weekends, you use that money to buy more stock with. Because ultimately, it's about sitting down on a weekend, researching companies, going through the fundamentals, looking at some of the technicals, and being smart and methodical with your purchases. Because if you're smart, you're methodical, and you buy on down days, you start training yourself to buy when stocks go down and sell them when they go higher, you will make more money. I think that's why you're here. I think that's why you're watching this video. I think that's why you're interested in whatever program or courses that I have to offer that you might want to go through. I teach people this stuff because I'm a really good teacher. I love doing it. It excites me. It gives me a lot of energy because I figured it out at a very early age. I've done the math. I've done it 1,000 times over, and I've helped hundreds of thousands of people really figure this out. And if this was exciting for you, if this was liberating to you, if this was interesting to you, let me know how I can help further your education, further your experience, further your knowledge on this subject matter. Because ultimately, you figure out this subject matter, you figure out how to buy, where to rent out your stock, how to bring in additional income, how to use that additional income to buy more positions, how to scale into a position, how to sell it when you have a nice profit, and just have these beautiful windfalls. That will and can absolutely change your financial future. Thanks for watching. You rock.